Welcome to The Explainer. Today, we're going to get inside the head of one of the world's most powerful CEOs, Jamie Dimon. We're going to see how he's thinking about AI, this kind of crazy economy, and really the whole future of business.
So to really understand what AI is doing in the real world, beyond all the hype, we're going right inside JP Morgan Chase. And our guide is going to be the CEO himself, Jamie Dimon. His perspective is super fascinating because it's so on the ground.
All right, so let's dig into that quote. It's kind of the tip of the iceberg. What does he really mean by that? Well, we're going to start with how his company is pouring billions, that's with a B, into this tech, and why he thinks we haven't seen anything yet.
All right, let's start with the micro view here, how one single, absolutely massive bank is using AI on a scale that's, well, it's pretty mind-blowing. And look, this isn't some 5-year plan. This is happening right now, and the numbers, they're just staggering.
Okay, let's start with the cash. $2 billion. That's not their total investment. That's what JP Morgan is spending on AI every single year. I mean, that's a huge commitment, right? It just shows you how central this technology has become to their entire game plan.
And look, it's not just about the money. It's about the brainpower. They have 2,000 machine learning experts and data scientists working on this stuff. And these folks aren't tucked away in some R&D lab. No way. They're embedded in every single part of the business. We're talking fraud detection, risk, marketing, even coming up with new ideas.
And the ripple effect across the company? It's huge. 150,000 of their own employees are using the bank's internal AI tools every single week. I mean, just imagine the boost in productivity when that many people can instantly summarize long reports or scan contracts in seconds.
So here's the kicker, the really crucial point. Is this massive investment actually paying off? Well, according to Dimon, for the $2 billion they spend, they see a direct $2 billion benefit. We're talking cost savings, new efficiencies. It's basically a one-to-one return on investment. And he still thinks they're just getting warmed up.
Now, if you're listening to all this and thinking, okay, this feels a little bubbly, a little overheated, well, Dimon would actually agree with you. In fact, he compares this whole AI boom to another massive tech shift we all remember, the dot-com bubble. His argument is pretty simple, and it makes a lot of sense. He's basically saying, yeah, a ton of money is going to get wasted. A lot of AI companies are going to go bust, just like what happened in the late 90s. But out of all that chaos, that's where the giants are born. Think about it. The first internet wave gave us Google and Facebook. He's betting the exact same thing is going to happen with AI.
Okay, so that brings us to the next really big question, probably the one on everyone's mind. What does all this automation actually mean for our jobs? So will AI create more jobs or just get rid of them? Dimon tackles this one head on. He doesn't sugarcoat it at all. He basically says, don't put your head in the sand. But his take on it is actually pretty nuanced.
And this really gets to the heart of his idea. Look, he's very clear. Yes, some jobs, some functions, they're going to go away. But, and this is a big but, for a successful company that's growing, he believes AI actually creates more opportunities than it destroys. The key, he says, is to get ahead of it. Retrain your people, move them into the new roles that this technology is going to create no matter what.
All right, so let's zoom out. We've talked about AI inside one company. We've talked about jobs. Now, let's look at the entire economy. And here, Dimon's view is kind of two-sided. He sees the good, this bull market we're in, but he also sees some pretty serious warning signs. He's not denying that things look strong on the surface. The consumer is still hanging in there, people have jobs, asset prices are up. So far, so good. But he's got his eye on one major threat that he thinks the market is maybe being a little too relaxed about.
And that one big threat? It's inflation. He says he's just more nervous than the rest of the market, that prices aren't going to come down as neatly as everyone hopes. You've still got all this government spending sloshing around, and he worries a surprise jump in inflation could really catch people off guard.
And this is where it gets really interesting. You can see this gap between Wall Street's optimism and Dimon's caution. Right now, the market is expecting about 100 basis points in rate cuts from the Fed. That's a full 1% cut. But Dimon's point is, hey, when have these forecasts ever been right? If inflation sticks around, those rate cuts, they might not happen.
Which all boils down to his core philosophy for running a business in a world like this. Hope for the best, plan for the worst. It's not about being negative, right? It's about being a realist. You prepare your company to handle the hits even as you're hoping they never come.
Okay, for our final zoom out, we're going big picture. We're going to look at what Dimon thinks about the health of the entire capitalist system. And he sees a pretty fundamental problem, something he believes is actually choking off the economy's energy. So Dimon points to this huge structural issue. Think about it. The engine of American capitalism has always been the public markets, right? It's where new companies can go to get capital, to grow, to become the next big thing. But, he says, that engine is starting to sputter.
And to really get a sense of how big this problem is, you just have to look at the numbers. Let's go back to 1996. Back then, there were about 8,000 public companies in the US. I mean, that's a huge, diverse engine powering the economy.
And today, that number has been chopped in half. We're down to around 4,000. So, as Dimon sees it, we're not just letting this happen. We are actively driving companies away from going public. And the big question is, why?
Well, Dimon's argument is that it's basically death by 1,000 cuts. It's this combination of things. You've got endless regulations, the constant fear of getting sued, these one-size-fits-all rules for how to run your company, and this insane pressure to hit your numbers every single quarter. It all just adds up and makes it way too hard and way too expensive for a lot of companies to even bother going public. He says we've, and this is his phrase, kind of crushed that vital part of our system.
So what's the big takeaway here? It's this really interesting mix, right? On one hand, you have this incredible long-term optimism about technology, like AI and what people can do with it. But on the other hand, you have this very clear-eyed, short-term realism about the risks we're facing. He sees AI as this amazing engine for growth, but at the same time, he sees these huge hurdles in the system that could hold us all back. And that leaves us with the real challenge. In a world changing this fast, can anyone really plan for the worst while still truly hoping for the best?